Hey there, everybody. Christopher Inks with Texas West Capital. It's just after 11 a.m. Central Standard Time here on October 30th, 2020 in San Antonio, Texas. Another beautiful day, man. It was a great day yesterday. Looks like it'll be a great day today. Hopefully, it's great where y'all are. That's a lot of greats, right? At least they're not huge. I'm just kidding. I don't hate President Trump any worse than I hate Biden, so... You guys don't have to take offense either way, depending on whoever you may or may not be voting for. I tend to be quite apolitical. So, anyway, Chris Day, what's going on, man? Sean's here. Greg is here. Nevlusian. Farm D, what's up, buddy? Block Tech checking in. Let's see, who else is here? Brendan's here. French Bull, what's up, man? Man, French Bull pumping some content, guys, there in Discord. Love hearing his thoughts. Let's see, who else is here? Crystal Mowgli, what's going on, man? Casper checking in as well. Good to see y'all checking up here. As always, guys, don't forget, you can join us at howtotradetowin.com. Just come on over to this page here. Like it says here, Tier 3, we've got over 30 hours of educational content, and that increases every week, because every week we do a live stream for Tier 3 members, teaching them tips, tricks, and techniques to get them trading pretty quick, as well as dive deeper into other aspects of trading and whatnot. So it's a great thing. We have over 50 setups a week. We have 20 assets that we do daily and intraday across all the markets. So lots of content, guys. If you don't believe me, ask somebody there. Just scroll on down the page here. Get in. Remember, we've got tiers 1 and 2 open right now again. I'm not sure how long they're going to remain open. We've still got some spaces left. So, if you've been thinking about it, don't hold out, or you might not get a chance to get in until we open it again, which is likely to be months and months away. So there is that. But definitely Tier 3 is the one that gets you everything. Tier 3 gets you all of it. Probably more content than you can absorb, just so you know. But anyway, chart requests and all that as well. By the way, we've started a new channel. We've got a new traders only channel that we've got that Adam came up with. And basically, he'll give a little discussion with you when you first come in. And if it seems like you're, a really new trader, he'll let you have access to that channel where you can ask questions, and whatnot without feeling like you're being judged or something. Because, a lot of times when you're new, you get nervous because there's a lot of other traders who are doing really well and they're saying things that you don't understand. And even though I say, hey, listen, don't feel like you can't say anything. Everybody's real helpful here. They are. But, still sometimes if you're new, you're still going to be very concerned about it. So we've got this new channel now built just for you guys. And Adam's heading that up. And he'll be able to talk to you about all those things that, bother new traders when they first get started. You can ask questions and whatnot there. And again, it's a completely judgment-free zone. The only people in there are new traders. So you shouldn't feel like, stupid or anything like that. You shouldn't feel like that anyway, guys. We do everything we can to make sure nobody ever feels that way with what we do, because it's all about learning. It's all about getting better. And if you don't ask the questions, how are you ever going to know? And the thing is, most of the time, those questions you're scared to ask are the same questions that other people are scared to ask as well. So nobody gets to learn. And that's not what we want here. So anyway, join us. We'd love to have you there, guys. Let me see here. Who else is showing up here? Martin, happy Friday, my friend. Good to see you. Lemmy, hello there. Let me see here. Bianca's here as well. The Past Crypto is here. You have a great weekend too, please. And Brian Riley says, would love a correction after $14.20. Oh, 14. No, not 14.20. See, when you type things like that, that's what you read. I think you mean 14,200 on Bitcoin, maybe. Yeah, we'll see. Masal, what's up, bud? Good to see you, man. All right, let's kind of jump in here and see. The first thing, just real quick here, when it comes to the stock market, you guys know what my bias has been for a while here. I've been giving you my case, been building up, continuing. And so somebody here found out that, hey, guess what? 2020, the year 2020 is a TD9 on the NASDAQ, the Dow Jones, and the S&P 500. Look at that. Who would have thunk, right? Anyway, not looking like a very good year here. Looks like it's setting up. Now, as always, even if you're looking at this as TD9, you want it to complete. So, you got the end of the year to complete. Even if you see this as a doji up here, which could suggest a potential reversal. It's just a pause until it's confirmed. So you'd need to see in 2021, do you have a nice supply spread candle following it, kind of confirming that reversal and downtrend. So if you're, longer term, there you go, right? But anyway, just something interesting that somebody had come across and posted over there in Discord. So I figured I'd show that to you guys. Just kind of aligns with everything else that I've been telling you for a while. Man, I've taken so much ridicule for that. It's so ridiculous. But anyway, it is what it is, right? Guerrera, what's going on, man? Well, I appreciate that. Thank you. I'm glad you love it here. We're trying to do what we can. Hopefully making some sense here. Let me see here. Aramis, what's going on? Candle Shepherd, what's up, buddy? LXT checking in. Let me see here. The HD video quality made you realize that I have a beard. Yeah, we always post in HD, guys. So if you're not getting it, it's probably due to your particular internet connection where you're at. Just hit the little gear icon or whatever. Usually it's by the bottom corner of the screen, and you can set that from auto to 1080 HD. Let me see here. Win, what's going on? Good to see you. Lemmy says, Chris, you seem very bearish on the stock market. Do I? Yeah, I do. What about the 401k investors? Still safe to invest in our 401ks? It always depends on time, guys. Listen, dollar cost averaging historically has been a proven winner. The thing with dollar cost averaging is it depends on when you start. The older you are, the less time you have. Dollar cost averaging works because you have time and compounding. All right? So that's why people that tell you, when you want to start saving for your retirement, start early. Start in your early 20s. You've got time. The market's going to go up and down along the way. But overall, the market tends to trend up. It's going to trend right, and it's going to go up, right? The problem is, if you're older, dollar cost averaging may not make as much sense. Because especially if you're like now, for instance, let's say I am correct and the market's headed for this huge, stupid, 1930-esque kind of depression kind of thing, right? This would not be the time to buy. This would not be the time. Not if you're in your 40s or, something like that. No. Because if it's going to take, if it does anything similar to the 30s, it's going to take 20 or 30 years to get down and back up to where it's at. So by the time you're ready to pull out, by the time you're ready to retire, if you make it to that age, it's all said and done, right? So, it's always a personal choice you have to make, guys. But the way I look at it is, if the market does what I'm thinking it's going to do, it's going to be down for a while. It's going to be a while before it ever gets back up here. Years before it gets back up to where it is here. So if you're younger, you're fine. You just have to weather it. And even if it doesn't take 20 years, even if it takes 10 years, it's still a long time. 10 years to basically go down and come back up just to get where we're at now. And so maybe it's not the best thing for you, depending on who you are, what your time frames are and whatnot. But these are the but we never know for sure where the tops and bottoms are. We do our best with with what we know, trying to figure it out. You guys, I've made it I haven't hidden my thoughts on what I think. I've given you a lot of reasons for it, a lot of real solid, research and stuff. But I could still be wrong. So you have to kind of decide, what do you think's happening? How do you feel things are? And then kind of go from there. Sharon, what's going on, man? Good to see you. Let's see here. Tipper, what's up? He says, Bitcoin looks bullish. CVD showing a lot of aggressive selling that gets bought up instantly. Yeah, we'll take a look at that for sure here in a minute. Let's see here. Don't you think we get another melt up in the next few years and start the next year and the start of next year before the big crash? No, that isn't what I think. No. Could it happen? Sure, it could. Sure, it could. Is that what I think right now? No. Nothing's happened here that's given me a reason to change my mind about what I believe is happening. Now that could change, as the market continues to play out. But for right now, no, there's nothing in there that's giving me any significant reason to change that. Hey there, Pedro. Good to see you, Spiral Architect. But where to put your money then? Yields on CDs are super low too. Yeah, so, it depends. I mean, if this is the top of a credit bubble, you want your money in cash because the dollar's where it's going to go. If a credit bubble crashes, then the dollar should gain, in that situation, at least for a while. So you put it in, you put it in the dollar. If you actively trade, you can trade the bounces. You can long the bounces and short the tops. You can, if you get the right one, you can do the inverse ETFs. But remember, you don't want to hold those for months and years and whatever, because the fees associated with them are going to eat up all your returns that you might have. Maybe you get Bitcoin. So I mean, there's ways to play it, and just because the market itself goes down doesn't mean everything goes down. There's usually a segment, or at least a few within a segment, that do pretty well through it. For instance, in 2008, with the great financial crisis there going up, I believe the dollar store, Dollar General, maybe Dollar Tree, whatever it was, ended up doing really well during that time. Alcohol did really well during that time. Alcohol tends to do pretty decently during periods of depressive anxiety and whatnot. People tend to drink. I don't tell you, I don't say that lightly. I just say that's what happens. So many times, your brewers and stuff like that will do pretty well during economic downturns. Consumer discretionary is, but everybody needs healthcare, right? So healthcare usually does all right. Staples do all right, consumer staples. Those types of things generally do, all right in a downturn, because it's things that people need. Just think of, what do people actually need when you're looking at that. Who knows? This time around, companies like Amazon might actually do pretty well because, we're all getting so home-based with everything, and they do the delivery and all that kind of stuff. I use the heck out of them. So, yeah, thoughts like that. Hey, Clark, man, look at oil, man, right? Doing his drop that we're talking about. Oh, man. Tipper, you were you're talking about just a melt up by New Year's? Nah, I don't think so. I think if anything, I think the election would cause more volatility throughout the end of the year, especially if it's contested. Whoever wins, they both basically said, listen, we're going to contest it. So if it's contested, the market is going to be left, is going to be upset. It's going to be unsure. Market doesn't like when things are volatile, when there's some kind of guarantee, or I say guarantee, but some kind of plan, something they kind of sink their teeth into. When things are very up in the air, the market doesn't like that, doesn't do well. So I would think we'd have more volatility continuing through the end of the year, if anything. And volatility tends to mean prices go lower. When the VIX rises, the stock market drops. So, I would think it would definitely head down. Maybe guns as well. Maybe. Guns and ammo. There's a lot of unrest going on throughout the U.S. and the world, really. We've talked about that before. So yeah, potentially. Let me see here. Oh, let me catch here. Thoughts on another stimulus bill that seems inevitable with the current coronavirus situation? If by inevitable you mean maybe February, yeah, probably. I don't think at this rate right here, the election's in less than about a week, right? I don't see any stimulus bill getting passed then. And then after that, there's going to be the whole transitioning of power and or arguing that it's not legitimate and fighting it or whatever. So I don't see them getting any stimulus done probably until maybe February, maybe. So what happens then? No more stimulus. Jobs are still dropping. Everybody's all excited about this 33% GDP jump this past quarter, which is been the best in history, but it was followed by the worst in history, the one before it. So, when you get extremes, you're going to get extremes the other direction. I think people are way too excited about that, and you have to think about it. That GDP jump was what? That was everybody got their stimulus money, and unemployment benefits were up there. Everybody was still, they were starting to spend money, right? But we don't have any. We haven't had any of that here recently. So why should this quarter continue to be, this quarter continue to do well? You had an extreme reaction down, you had an extreme reaction up. I think it's probably coming back down again. So yeah. Uncertainty, that's the word, Lemmy. Thank you. Yes, the market doesn't like uncertainty. How about putting money in that nat gas? Well, we'll see where we're at right here. I think it's pulling back right now. Be sure to check the updates, buddy. Cannabis, still questionable cannabis, guys. Cannabis is not, guys, listen. Cannabis to me is a lot like fracking, but different. Fracking, I've told you guys, to get oil out of the ground is very expensive, but the money was easy, and that's why we end up with the surplus we had. But now that money isn't so easy, and fracking is still so expensive, and we've got this supply glut and not enough demand, fracking's kind of gone out, right? Well, cannabis has notoriously been not much of a moneymaker. Cannabis had done well coming up to where we are previously because they just had a lot of money coming in. Again, the same thing as fracking, had a lot of money coming in. But now we're sitting here like, well, what? Kind of twiddling our thumbs and going on there. So I'm not sure that cannabis is the place to be at the moment. There might be some possibilities in there. I think you'd probably do better with alcohol than with cannabis if you were looking to buy something in stocks there. Now, let's see here. According to Trump, he thinks straight after the election, that there's going to be a stimulus thing. But no one even knows if he's going to still be the president. Yeah, exactly. They're both going to say what they need to say to get you guys to vote for him. That's all it is. If you guys don't really understand it yet, it's two heads of the same stake. All right? That's all it is. I know people want to believe that there's a difference between Republicans and Democrats. There really isn't, guys. It's all about power. It's all about control. Both sides think that they're doing something better, think that their ideas are better than the other. But at the end of the day, it's both of them just abusing power. And you know who gets hurt? All of us. Don't forget that, guys. That's the truth. So that's why I'm pretty apolitical. I just think it's just nonsense. I don't like the idea of hurting people like that, just for the sake of power. Anyway, let's go ahead and jump on here, guys. So Bitcoin, where are we at? Well, Bitcoin's been doing this sideways thing, right? So with Discord, I've been talking to the last few days about the fact that we're going sideways, and it's not a very healthy place to enter, especially if you're kind of within this 50% mid-range here. So you got 25 up, 25 down, but this 50% in the middle. Really not a conducive place to conduct business, unless you're getting something like maybe a bullish divergence or a bearish divergence or something like that. Something that gives you a little bit more confidence in that entry, but things are what they are. Currently, we've been exploring a couple of different counts here. If I look at it, I kind of go, okay, well, 1, 2, 3, 4, 5. So that's 1, 2, 1, 2, 3, 4, 5 gives you a 3, 4, and a 5. To me, that seems you can kind of stretch and get an ABC out of that. But to me, it seems like even here on the 15-minute and jumping out the 1 hour, it seems like the 5 count is the easiest. So if this is 5 down, this necessarily is going to be 3 up, and then you're going to have 5 more down at least. So if that's the case, something similar to what we're seeing here, which gets this then as a 1 and then an ABC here and then a 2. And then you have a 3 down here. Let me see. I'll have to change this a little bit because this went up a little bit higher here. And I'm in no way saying this is going to happen. I'm just saying if it does. If this count turns out to be correct, this is what we'd be looking at. And then we'll talk about here. All right, so that gives us a 1618 up here around 2718 minimum. That would give us then a wave 4 up here around 13,056. And that gives us a wave 5 down here around 12,500. Again, going back to the 12,500 I've talked about more than a few times. And that pretty much keeps it within, depending how long it takes to get here within this descending channel here, this base channel. And that's a good, if it stayed within this like this, that would increase the confidence in this being an ABC here and having 5 more up at least. Now, if you're dropping through here beyond this level here, let me see. Let me do this. Yeah, yeah. But if you're dropping below this here, this 12.5, and you're continuing to go down, then we start looking, instead of an A, B, and a C, we start leaning toward maybe it's a 1, 2, 3 here. And that would give you then, if that's the case, it gives you a minimum wave 3 down here of around 12,112 or so. But, understanding that doesn't mean you have to be bearish, guys. This means you're prepared. Right now you look at, okay, if this pans out here, so what we need to see now is a rejection here and a decline below this wave B swing low here at 13,242 and 79 cents on Bitstamp. If we drop below that, that increases in confidence that this is the count. Dropping below the wave 1 swing low here at 13,129 and 26 cents should more or less just about confirm it. And so we'd be looking at this, right? But again, you're looking at the more bullish outcome, which is an ABC. But if you continue on down toward here, then you're looking at it as a 1, 2, 3, 4, 5, which gives you an A and then a B and a C, bigger correction. You don't have to have a bias, and it doesn't matter what your bias is by looking at this. This is just saying, listen, if it does this, then this. Otherwise, that, right? If it pushes up above this swing high here, then we look at maybe this is an ABC here. And then we've got a 1, 2, maybe 3, 4, 5. So at that point, you can go, this is ABC down, and this is a 1, 2 working up. Okay? So this is the good thing about Elliott Wave, guys. You don't have to be correct. You just have to know that where your validation and invalidation levels are. So if we look at this, again, if we get above this swing high, that makes it likely this was ABC down, and then this is a 1, and this is a 2, and we're working on 3, 4, 5. If it reverses here and drops below wave B, that starts increasing the odds that it's an A, B, C at least. Go down below wave 1, does it even more, drop down below wave A, confirms it, we're doing it, right? And then if it goes below this 12.5 and continues on down here toward that 12.2 area, then we go, okay, maybe not an ABC, but we're becoming more likely a 1, 2, 3. You see how this develops, and your counts show up there. So, that's where it is. But realistically, guys, we're sitting right here in the middle. There's no reason to be jumping in so early here. People are jumping in here because they're bored and they're scared they're going to get left behind. The problem is, even if you're entering in this area here with the right direction, you've got a chance. Either it's going to go, ultimately, it's either going to go up or it's going to go down. You've got a 50% chance. That's okay. The problem is that even if you have the right direction, it may go in the other direction far enough to knock you out, to hit your stop loss before it goes in the correct direction. So instead of it just being, a 50% chance, that's significantly reduced by the odds that you're going to get stopped out along the way. And that's why it's not such a great idea to be entering near the middle of a range. This is the range for that swing high to that swing low right there. You want to short rejections out of this area up here, or long bounces out of this area down here. You don't want to touch it in this area. Again, unless there's some clearly on a very short time frame, 15-minute or something, unless there's some clear divergence. For instance, look at this right here. See this 15-minute divergence right here? Let me see, let me make sure it shows up on the 15-minute. Yeah. So we've got lower lows right there, but we've got higher lows right here. That's a higher confidence trade entry, even though it's still within the middle of this area here. It's also happening right above the S1 pivot, giving you a little bit more confidence in that. So this much more higher confidence entry right there. If that's not there, maybe you get a little confidence because it's bouncing above the S1, but still not feeling it. But because you have that hidden bullish divergence and bouncing right above that S1, all of a sudden, it's a higher confidence long there. Now, that doesn't mean long there through the top there. It means, but you can probably long for a little bit in here anyway. And that's what you're getting. You could probably pick that to long at least to the pivot, because the pivot's a definitive resistance area. And so that's at least a trade right there. And as you can see, it went right above it and pulled back. So that would have been a good trade, even though it's in the middle of the range. But normally your trades in the middle of the range aren't worth the effort. Aren't worth the time that you put in to get them. Hey, they're off main. What's going on, man? Andy, what's going up? What do you think about real estate worth buying an investment property now? I don't think so. No, I've put off actually buying real estate. I've been leasing for the last 2 years. Since I moved to San Antonio, rather than buy, just because I've been waiting for what's going on now. So we had real estate run up there just recently, but now it's starting to drop off. Home builders dropping off. Wood, of course, hit that, that ridiculous high lumber did. And so all that's kind of ticking off now. So this is what I've been waiting for, is this decline, because I would have kicked myself if I bought real estate in the last year or two, for a longer term period, and the market was going to crash. Worst case scenario, at least for a couple of years, market doesn't crash, continues going up. All right, I can get in. But, I watch real estate. I watch a lot of especially the higher end real estate. And we're seeing a lot more of it going on sale right now. And what's on sale is getting reduced a lot. I'm not talking about little reductions. I'm talking about big reductions. And why is that important? Because when you're people that have money, your higher end net worth people, when they're at that point that they're not able to buy, that they're not able to, or that they're trying to get out of their very expensive properties, that's usually a sign that the economy isn't doing so great. They're usually the last ones hit, in a worsening economy. Your lower end workers, again, retail, stuff like that, they get hit first. That's what happened with COVID. The lockdowns, all the, all the waitresses and bartenders and all that kind of stuff kind of got locked out there. And then it kind of works its way up. The longer it goes out, the more it works its way up. The longer the economic deterioration extends, the less companies can continue doing what they've been doing. And so they start cutting back. And eventually that starts reaching your higher paid people. So, looking at it that way, it's not looking so rosy at the moment. And my thought is it's going to continue to go down. Commercial real estate, everybody thinks, that people are definitely out of the cities now. I don't think it's definitely. I think maybe a shorter term thing. But I do know people that own some pretty big companies, and they, a lot of them are actually cut back their office space and whatnot. And they see it as something they're going to be doing for a while. So there is that out there. I don't know that necessarily people are definitely moving out of the city and that overall all the offices are going to stay shrunken down overall. I think once the economy kicks back in and whatever, I think they'll still kind of come up, or at least when you get to a low enough level that they see it as financially beneficial to get into increased office space or increased real estate space at that time, that's when they'll do it. I don't think it's like a forever thing, though, that everybody's just going to migrate out of the cities forever now. Casper, I agree that a record increase in GDP, reactionary, for sure, off that large drop. Did I see ISO's bullish count on Twitter? Train's asking. Yes. Actually, he's over there in Discord with us too. He's posted there as well. That's the, if it's going up there, that's kind of the count we're watching. If it's going up there, that's the count we're watching. Right now, we're just looking at possibilities in here. Because if all you think is it's going up there, what happens if it goes down? You don't know. So right now, we've got a high, we've got a low, we've got a lower high, potentially. If we get a lower low here, that sets up this what I'm trying to say here, bearish market structure. But right now, we do have this, this high to low to high here. So we've got this 2 points equal a line. Third point's almost touching, almost a trend. So if we're pushing up through that, again, getting through this high here, pushing up through this trend, that makes it seem much more likely that this is bottomed here. We're probably following something at least similar to that count, if not that count. Yeah. But until it does, you have to be aware that there is a possibility that it may head down. And if it is, where are we looking and why? So that's kind of what we're looking there. Blockchain gains. What's going on, bud? Glad to see you checking in here. Gerardo says Southern California real estate went up like 12% over the summer. Ridiculous. Yeah, tell me about it, man. What's happening there? All the Californians are moving to Texas. How are real estate prices going up over there? I'm just kidding. Big Texas joke when it comes to Californians moving in. Because they have. Pretty big in the last 20 years. Oh, so, yeah. Seen something funny. Somebody posted, said, hey, Californians, remember, you're migrants, not missionaries. Those are people who really are very, Texas has been a very Republican state for a long time. And they're kind of saying, hey, don't leave your area there, then bring those same ideas over here. It didn't work there. It's not going to work here. Is what they're kind of saying. So I can blame Rick Perry for that one. Gerardo says. Cameron, what's going on, man? He says all Texans moved to Colorado. Yeah, the ones that are looking to get a little bit higher up in life, I guess. Kind of moving there. Yeah, don't California my Texas is the bumper sticker. Exactly. So this is kind of what we're looking at here, guys. If we jump on over here, some market profile, look at the TPO charts here. You know what? I've noticed that I don't think you guys can see this very well right here. So let me see if I can change this a bit and maybe still highlight it, but hopefully maybe allow you guys to see what's going on here a little bit better. Let's see. That's even worse. What did I just do there? Yeah, there we go. Let's get this a little bit darker here. Kind of like that. I want you guys to be able to see what I'm talking about here. Move to Algeria. You'll have a lot of fun. I like that, man. I like that. Cameron, I'm doing great, man. Hopefully you as well, bud. So here's what we're talking about. So yesterday, if you guys follow me on Twitter, I posted this circle up here. And at the time, we had something similar to what we're seeing over here. We had this aggressive OTF selling going on. And I said, okay, be careful on long in there. I said, unless it's overcome, be careful on long in there. And sure enough, went on down. As a matter of fact, price ended up closing at the end of the day back inside the value area here. And then so today we opened up. And so as you notice here, the entire day's activity yesterday took place within the previous day's value area. So no real OTF buyers not really showing up. They came in a little bit up there, and then, they kind of get bought up there till we just had a single print, which then is nothing. But we did print much smaller here into it. We get today, we have this large initial balance range here. We peaked out just a bit, but notice, peaking out above yesterday's high and the value area here for the previous day creates this large OTF selling coming in there. Aggressive other time frame selling going on. You got this large tail of single prints here. So last night, when I did the update for Discord, the value area was up here, about this area where we're at right now, and as well as the pink, the POC, the point of control up there and everything. And I told him last night in Discord, I said, well, in the update, I said, what we're probably likely to get, because price had then moved back down here to the low end, I said, we're probably going to get something similar to here, this double print idea, as it kind of comes together. I said, I don't expect any strong movement out of the range, really, out of the previous day's range, other than, what we have there. But no, move out and continuation. I figured it'd still be basically just trading within that range. And so that's what we've got so far. What you can notice over the last few days is you had this large double distribution event going on here, right? Double distribution of the TPO chart. And then yesterday, you had another same similar thing, but much smaller. So you're converging. You're coming toward this area here. Today, again, doing the same thing, though leaning more toward this low side here. Now, what's interesting is you can look down over here from about 4 days back. You see that point of control for the TPO down here. 3 days ago, it moves up a little bit. Yesterday, moves up a little bit higher. Today, moves up a little bit higher. But that TPO here, again, is coming below this large IBR here. So we have to continue to watch it. Nothing here is saying that you should be trading for any definitive movement out. This is all range-based here. It's done exactly what we've been talking about the last few days based on the chart here. It's been staying, it's been contained. So, honestly, guys, we might just sit here and continue to range through the rest of today and maybe not get a breakout one way or another until tomorrow's candle. When we keep looking at this here. But you definitely want to be careful up here at today's tops, because as you can see, there was that aggressive positional trader selling going on there. Basically, what this is saying is these positional traders, these longer term traders in general, felt that that price is overvalued up here. Now there are a couple of single prints down here, so this is a tail as well, and they felt not quite to the same extent, not quite as convicted. This shows a lot more conviction. There's a lot more single prints here than here. So there was a lot more conviction that price is overvalued up here. There's a little bit of conviction down here that it's undervalued down here, but nowhere near as much as what was overvalued up here. So be careful as price gets toward this area again, because the market's already telling you right now what it thinks about that. And of course, this was at the beginning of the day, and by the end of the day, price had ended up way down here. Well, price actually ended up closing up here, but spent most of its day down here. You know, the fairest of values so far for today, the market kind of feels is right here around 13,320. And right below that is the volume also, the highest volume, the point of control for volume. So volume and the TPO is kind of agreeing that the most fair value right now is right around 13,320. So we're above that now. We're trying to see if it establishes some higher value there. But for now, it's still down there, which is below that initial balance range there. Why is this important? Because that initial balance range is what your retail did. Retail provides liquidity. Your OTF players are the ones that make that market move beyond that range. And so your bigger players got it moving out of that. Your bigger players aren't convinced this is great here. But it's still a little bit higher than what it's been, so it's edging up overall. Right now, today's value range, as you'll notice, is contained within yesterday's value range, which was contained within the previous day's value range. So again, everything's just kind of, you're working on getting to that more and more fair price is what's going on here. So I'd wait for some real action before taking a long that you think you're going to hold up to 15,000 or higher, or a short you're going to hold to 13 or 12.5 or something. Let the market tell you what's going to happen there. That's kind of where we're at the moment. If we look at the CME, let me see here. Give me just a minute. Let me make sure it's all set here. There we go. All right. So if we look here at the CME, let's see here. Again, we've got price up here, right there around that 13,485. Does that sound about right? 13,485. 13.5 at 31. Yeah, right there around that area. We've got that up here. But again, kind of similar with what was happening previously. You had your POC yesterday down here. You have your POC just slightly higher here. But, again, the value area within the previous day's value area, which is within the previous day's value area, et cetera, and so forth. Let's kind of go in here real quick. So again, as you can see here, there's that large value area, smaller value area within it, smaller value area within it. Notice the bounce here on the CME came right at this. Now, the previous day, their volume point of control was way up here. But within their value area here, this is where you have a lot of that volume. And you notice that's that area where it popped off of. But you can see, let me zoom in here maybe a little bit for you. But if you look at it here, you can see you've got one single print down there. So right here, you've got a tail of single print. You see this? This is conviction. The OTF buyers felt that price was very undervalued at this point. Right here, not so sure. Right here, they were really, really convinced that that the price was way undervalued here. Here again, less, still kind of convinced, but not much less than what they were the day before. And then today, not really at all. However, if we look at the high end here, again, same thing I showed you the other one. Convinced, there's a high rate of conviction that price is overvalued up here right now. But again, all that really is doing here is it's just resulting in this consolidation of price. And so right now we're here again. I want to see, where does this close at the end of the day? Do we close back inside the value area? Do we close below the POC here? Do we close within the IBR here? This is what I want to see at the end of the day. Kind of let us know what's coming up for tomorrow. Let me see here. DXY, continuing to do DXY. Again, guys, until we get above this swing high up here, this 94.7, 94.74 or whatever it is up here, this swing high. Until we get above that, we still have to be serious about it potentially heading a little bit lower. Again, guys, I don't think it's going to go any lower than maybe, 90 and a half, 91, somewhere right around there at the lowest, I think. So right now, what could be happening? Well, again, I have my red count here. The potential triangle is what I'm looking at. If this is not going to get above this high here, if it's still corrective, then I believe it's a wave 4 triangle. And so we have an A, a B, should be a C here, and that should be the top. And then we should have a D that does not go below this swing low here, and then an E, which doesn't go above this swing high. And then again, based on the height of the triangle, it gets you down there around 90, wherever E ends up finishing off, potentially around 90 and a half. So not a lot of fall below, right here, 91 and a half, basically, a little bit over 91 and a half, basically a point drop. And if it does that, you should expect a strong move back up off it. The other possibility here, again, is that it moves up through this top here. And if it does, well, then this looks like this is actually the bottom here. And so it says, okay, well, what is this? Well, then we've got two ideas here. One is we've got an ABC, one, so a leading diagonal. That's a 3-3, 3-3-3 interior wave set. So all waves are corrective. So again, it'd be ABC for 1, ABC for 2. You'll get ABC for 3, then for 4, and ABC for 5. Or we've got a 1 here, and we've got a very drawn out, large wave 2 expanded flat. So you get 1, and then you have an A, B, C for 2. Now, if that's the case, you're going to have to say, okay, 1, 2, 3, maybe 1, 2, and then 3, 4, 5. You're going to have to get a 5 count out of this. I think I would probably be leaning more toward a leading diagonal out of this. ABC, ABC. It looks like a much cleaner ABC. But again, this has to get above that swing high up there. But if it's going to do that, then right now we've got a 1, 2, and you have this 1, 2, 3, 4, 5. Gives you a 3, 4, pulling back almost to the 38.2. Breaks out of the descending resistance. If we get a move above this swing high, that sets up a wave 5 minimum target up there of about 94.466. And that'll be prior to the top there. So then you would get that 1, you give it pull back on a 2, and you'd have a 3 pushing up and through it. I think the one thing that would surprise most people in the market right now, or most analysts or whatever, is if this is the bottom of the DXY here. Because everybody were so bearish on the dollar at this point. As I pointed out, and then of course I said at that time, that anytime the market has been anywhere near that bearish on the dollar, it's always reversed off that, and and headed higher, much higher. So we're just kind of looking right here. So you go, well, guys, it seems like it's been going sideways forever. 2 months now, more or less. Well, yeah, with as bearish as they were here, if they're starting to flip positions slowly but surely and start getting some momentum on that, it's going to take a little bit. Which would explain the two potential bullish scenarios, or even the triangles of 4. You get a triangles of 4, you get your final thrust down, which is just a slightly lower low, and then you're up. And of course the DXY causing its havoc on the markets as well. People are still not understanding. They think that just because the DXY goes up, immediately everything has to go down. That's not the way it is. Correlations, you're looking for movement over time. You're not looking to match every tick. If you're looking to match every tick, everything's going to be correlated and not correlated and correlated and not correlated and continue back and forth forever. But you want to look at a larger time frame, get a general idea of movement. Is the DXY moving down and then something else moving up, and then the DXY moves up and something else moves down? That's what you're looking for overall. In this case right here, really, it's still kind of going sideways. It may be going up, but we haven't made a higher high yet, so it's still kind of going sideways. This sideways gives other things like, say, Bitcoin, room to move around and do things freely until it starts seeing that DXY really kind of making that new higher high there. The only time that's different is when you have a sudden move with the DXY, a sudden strong move, in which case everything else just generally dumps at that time. It's that flash move that happens real quick. Hey there, I cannot read your name. It's in purple. You said you just joined. Have we looked at the XBT yet? Yeah, we just looked at Bitcoin. Yeah, yeah. So depending on where, let's see, you're on Twitch. Yeah, so whether you're on Twitch or YouTube, you can wait till the end and look back at it, or you can kind of scroll back if you've got that feature on which site you're on and look at it there. Are the CME pros short? As of last week, remember they increased both their long and their short. We looked on Monday. They increased both their long and their short positions, but they increased their longs more than their shorts. Their shorts more than their longs. So the pros are still net short overall. Retail is still exceedingly long. I mean, it's like 90+% compared to what they are short. We'll see what happens over time here, but that's generally not such a good thing for retail. So we'll see. But it's a little bit more balanced with the pros, but they still are definitely net short right now by a few thousand. So they're probably net short by, I don't know, 30 or 40% or something. Yeah, 30% maybe. Something like that. We won't know today until I think about 3 p.m. Central Standard Time. I think is when it's going to be released. And it'll just be the information as of this week on Tuesday. So don't forget that. They give it to us 4 days later after they put the report together. But all the information was due by the end of business day there on for the CME on Tuesday. And so we find out about it on Friday, a couple of days back, but still we get an idea of what's going on there. Let's see here. What else is going on? Let me find some other charts here for you guys. Let's take a look at the E-mini, see what we've got going on here. All right. E-minis hit my target last night, bounced out of the box, did well. I'm looking for a wave 4 to kind of continue to pull back over here, but I'm not sure we're going to get it. We've got a strong decline this morning. I mean, it's just the markets are just not having a day with it at all. They've had a tough week. If you're in Discord, then I was talking back here earlier in the week with the drop that we had that would probably set up for a much larger drop through the end of the week, and that's what we've gotten so far. If I look at this, excuse me, this may be an ABC. Excuse me again, geez. And then we may have an ABC down. It's come pretty close, about 90%. So I could see this be a flat that's playing out here. So A, B, in which case we'd have wave 4 coming right up around this 32.95 kind of area before heading down. If it actually A, B, and C, and it gets way up here where we normally look for at the 38.2 area, we'd look at it at 33.30, and then you have your wave 5 down here at around 31.59. But if this is going to be kind of the high here, whether it's already done or whether it's an A, B, and a C as a flat here, in that case, we'd expect wave 5 to continue down toward right, just about the same area, 31.50 to 31.60 kind of area with that. But there's nothing nothing positive going on with that stock market at the moment here. Pretty big drop off there. You're really looking for a breakdown below this swing low first. And then beyond that, this wave 4 swing low. Those are your two marks you're trying to get through right now. If you can get through both those, there's little to no reason to believe that price is heading up before the end of the year. Other than maybe, just like a wave 2 kind of pullback, 1, 2, 3 kind of idea. So, I mean, that's kind of where we're at with that. Let's see here. I recently did a German exchange, the DAX, for a member who requested it. Let me see here. They wanted a longer term look on this. And so the DAX is looking a lot similar to basically the Dow Jones. Remember, the Dow Jones is the index that didn't actually make a new high. It's the broad-based index. The DAX is looking a lot like it. We've got an ABC up here and a 1, 2, 1, 2. 3, 4. So looking at, from around the area where it's at, push up bid to for 4, and then 5 down here around 10,700. Get a 4, then you get a 5 lower down here around 10,050 or so. And so, this suggests a much larger move down, in line with my overall thoughts about, depressive kind of depression thing kind of playing out. But, if you don't want to be quite that bearish, you can still look at this as an A, B, and then a C, and you still look for that C getting down a little bit below that swing low at least. Getting there. And if it continues on beyond that, and especially depending on the count coming down, then you can graduate into a 1, 2, 3 versus an ABC. But yeah, so, Germany not looking too hot at the moment here. And, here's the thing. Over there in the Eurozone, Japan, or not Japan, but Germany is the workhorse. The pigs are taken, Germany's given. And I mentioned before, I said, how long is that going to last? Germany's been doing it a very long time, but at what point do they finally say enough is enough? Because you have Portugal, Italy, Spain, Greece, all that kind of stuff out there, just kind of sucking on the euro's teat, basically. End up with really bad economies over there, and their regulations and everything else they're doing just make it really difficult for them to be productive. Germany, on the other hand, is just busting out, continuing. They're the workhorse of the Euro Union over there. So if they go, the rest of Europe ain't looking too hot, right? Hey there, Hank. What's up, man? Let me see here. What is my lower target for Tesla? Oh, gosh, I don't know. I don't spend a whole lot of time looking at Tesla. Let me see here. I think I did a chart just recently, though. Is that the one I'm looking at? Yeah, right now, kind of this is what I'm looking at. Look at that big drop down through the channel there. So, if I got mine down here, we're looking at, this is what I'm looking at, kind of from over here, you've got this 4. I have to keep on going out here to see it. This is kind of my count going off here. We've got a 1, 2, 1, 2. But that 1, 2, 3, 4, potentially a 5 at the top here. Potentially, I've got a 5. I can count 5 out of that. So potentially a top. Which would make sense, coincide with the top of the NASDAQ, right? But right now we need to see a breakdown first below this swing low right here at 351.30, and then below this one over here at 329.88. If we can do that, I've got 5 count down to the EQ of this large structure here. So right around 115. Now will this turn out to be maybe an ABC? Maybe. Again, there's so much on here. I've got a 5 count. I just don't know if that's going to be finished. We need to see some movement down. We definitely need to get below this wave 4, of the lesser degree here at 277, 273 or so. We've got to get below that to really kind of say, okay, the top may be in here. Right now is a good candle, though, dropping down through that channel there, that wave 2 channel. That's a good sign to continue down there. So we'll see what happens with it. But right now, if the count's correct here, we've got a 5 down there at around 115. So that's kind of what I'm looking at the moment. Let me see here. Let me see. Candle Shepherd, what'd you say, bud? He said, you're getting really offended with how I'm talking about Portugal. We love sucking on the Euro teat, and is really proud about that. It's not saying anything about you personally, my friend. Nothing about you personally. Just talking about the way the governments are working there. Yeah. It's just the reality of the situation, right? Germany's given, and y'all just keep taking, man. But anyway, yeah, no offense obviously meant for you personally, and I know you know that. Let's see here. Lewis Winthrop, what's up? He says, Germany going back into lockdown on Friday. Today, they think. Yeah, I know a few of those countries over there. That was the big deal with the recent pop up with the DXY and decline of the euro was the ECB comments. The European Central Bank, they made those comments a few days back, and they said, hey, listen, probably more stimulus coming in December. We're going to start lockdowns now. Some certain areas of the union, we're going to start locking down. People didn't like that. Of course not. Amber Lee, what's up? Good call on the BSV chart. Awesome to know, man. If you guys are with us, at tier 3, you get the BSV USD chart as well in the daily updates. So one of those things, that's what they're referring to there. LXT is kind of thinking like I am. If Germany stops bailing out the Euro countries, the Euro is dead. Yeah. So we'll have to see. I mean, they benefit from it because, people are buying from them. They're producing stuff that's getting bought. So they're kind of subsidizing their own production, I guess is the way to think about it, more or less. But yeah, if they decide at some point, listen, we're just tired of, being the workhorse there in the field while everybody else gets to play. If they get to that point, it'll have detrimental effects on the Euro, on the union over there for sure. Let me see here. Oh yeah, LXT, that was you that was asking about the DAX chart. That's right. I forgot about that. Let's see here. Yeah, Amber Lee, it takes a little bit to, when you're first learning how to trade, it's uncomfortable, it's difficult, and that comes from the whole emotional aspect of it, guys. So you have to understand that. But the longer you do it, and so maybe you start with smaller amounts, so it's a little bit easier to not be as emotional. Believe it or not, guys, your emotions many times are correlated to how much money you have in the market. So if you're a new trader and you have a big position of money in the market, it's going to make you a lot more emotional. And so if you're just learning to trade, it makes it a lot harder to start out. But if you start with a much smaller amount where it's not really anything, it allows you to then remove the emotion. The benefit to that is that you start seeing that whatever you're doing is working. And so that benefit there increases your confidence. And so that way, as you start adding in more money and trading larger positions, that confidence alleviates the emotion you might normally get. And so that's the way it is, yeah. So it's going to be, whenever you guys first learn to start trading, it's going to be difficult at first, guys. It really is. You're going to be hold on, emotional, and it's hard to get through that. And it's nothing that you ever don't have to deal with again. Emotion's always there. We're human beings, guys. Be grateful you have emotions, right? But, eventually, you want to get those under control as much as possible. And then that's what we look to do, trading. As long as you can do that, you've got a lot better likelihood of success in trading. If you can't do it, it doesn't matter how well you know how to do something. You could have the most perfect targets on there, but you will never follow through if you can't get your emotions in control. So that's why I keep talking to you guys about risk management being so important. And then working on these emotions, which just takes time. Nothing you guys are going to learn. I know a lot of times you come in as a trader and you think that maybe you're going to learn how to do all this trading, in a week or a month or 3 months. Guys, the reality of it is, it usually takes 2 to 3 years of doing it correctly before you're consistently just profitable and believing in your system and confident in all these things that make you a more successful trader. But until then, again, it's a work in progress. And you might go, oh, well, I've been trading for 5 years. Well, maybe you've been looking at the chart for 5 years. Maybe you've been trying to enter or exit. Maybe, you've been doing all that. But if you haven't been doing it correctly, then you haven't done anything that benefits you. And that's what you're looking at, 2 to 3 years of doing something correctly here in the market to really become a consistently, and by consistently profitable, I mean just to the point where you trust your system, you've got your emotions well under control pretty much all the time, and all those things where you want to get. Now, that doesn't mean you don't become profitable before then. And some people will even become consistently profitable before then. Some people won't take 2 to 3 years. But in general, you should expect that it's going to take about that long. It took me longer. I had a hard head. I kept fighting it. You guys know my story. Eventually, I got to the point where I just said, you know what? I'm tired of this. I'm tired of losing all this damn money. I want to figure out what the heck's going on. And at that point, I became a student of the market. And that's why I know so much about so many different styles, because I went out there with the sole intent of actually learning how to use them and trying to figure out if there's anything I can pull from them to help me see the market in a better light. So, you know, it takes a little bit of time there. Hey there, crypto girl. Good to see you. Here but out and about. Have I mentioned alts in general, things to look for? Nothing yet on that. Let me see here. Oh, by the way, as far as Tesla goes here, I wanted to say, I guess there's always the possibility you could have an A. Well, let me see here. What's that swing high there? 465.90. 461. Okay. It's possible you can have an ABC here as an A and an ABC here for a B, and then working on an ABC here for a C. So you may be able to get a triangle here. Maybe the count's a little bit off, and this is a 3, and then we got a 4 as a triangle. We'll have a 5 on a thrust. Maybe. But that will be invalidated if price drops below this swing low over here, because this would be A. So again, if this is A and this is B, this is C working out. It cannot get below this 329.88 here. If it does, it's not a triangle. But until then, maybe you've got something looking like this playing out here. Again, the idea is just to be aware of what may be going on until you get confirmation it's not. And so, you know, that would give you, you know, A down here, B up here, C probably there, D probably there, E like that, something like that. So again, until it gets down below here, looking here at the daily, that's still a possibility. But the minute it drops below that wave A swing low there, it's no longer, it's invalidated. And we'll definitely be looking at this other count I've got on here. Let me see here. Pedro, what's up, man? He says, I'm a Portuguese in Germany. Oh, so you went to Germany directly to live off them, right? No, I'm kidding. Not really at all. Perfect time for a joke there. Hopefully nobody got offended on that. If you did, I'm sorry. Yeah, I'm sorry. I didn't mean to offend you. But I don't think I did. I think you guys understand real quick. Just an easy joke. Let me see here. Data showing up late again because he can't seem to get the 1 hour time shift. Get it down there. Good to see you showing up, Data. Let me see. How am I feeling about Ethereum these days? Shared wants to know. Ethereum. Let's see here. How am I feeling about Ethereum? Oh, let's see. There we go. That's what I'm looking for. Let me see here. Is this the old chart? No, this is okay. This is what I'm feeling on Ethereum at the moment on the 4 hour. Right now, I've kind of got this as a 1 and a 2, but until we're getting below this, you know, it could still be more bullish than that. My biggest thing right here is look at this complete drop off in OBV this entire way here from the 5th of September, basically for almost 2 months here. Price rose, higher highs, higher lows. OBV has been dropping the entire time. And so I look at that and go, well, it's not very bullish. If we zoom out here to the daily, let's get these pulled off over here. Yeah, I want to see what goes on up here. I'm not, like I said, if I look at this, I've got a count here, which gets us at 5 off this low here. Now this low is a higher low than this here though. So I've got a 5 up here. But, you know, it's very possible this could be a 1, 2, 3, right? So if this is a 1, 2, 3, then this is a 4. And if this is a 4, then when we zoom in there, instead of 1, 2, it's an A, B, and a C. So, you know, with something like that, if it's just an A, B, C, then generally what we're going to look for is a C. The target initially is where C equals A. So that's right here at 243.69. And that's right there at the high volume node. So if this is an ABC here, then I'm looking for it to bounce probably right around 243. Because again, I'm assuming that this right here is a 1, 2, 3. Let me see. I haven't touched this larger time frame in a while. See, it's still a short 3 though. It's the 1414. So, you know, again, when the wave 3 doesn't hit 1618, it's questionable. I mean, it should be right away. It doesn't say it can't be, and I'm not saying it's not a 3. I'm just saying that because it didn't hit the 1618, it's still it's questionable. So if I look at it that way, then it is possible that what we have here is an A and a B and a C. So if this is an ABC, then we should look for a lower low overall here. And if Bitcoin does its thing where it drops down toward that 3,000 level, then it's exactly what we should expect here. Happy with Ethereum dropping down there below that. So yeah, you know, still kind of watching as it plays out there. 3 days. See, look at your 3 day. Your 3 days well up over here at Stochastic RSI. It's you know, it's coming on a downtrend from this high up here, and it hasn't broken that yet. I don't know why it's not on log at the moment. Weekly is closer to resetting down here. It has room to still fall. But RSI itself is coming off this high up here. So continuation down on that would really open that up to that further downside there. So I really got to get all this stuff in the other time frames. Let's see here. Man, oh man. I'm going to get rid of some of this stuff here real quick so we can get a little bit better look at it here. I don't know what I just removed. Let's get it off the weeks here. That's all I'm trying to do. Why can't we just have one button get rid of all of it without deleting it? Give me just a minute here. And this way we'll get a little bit better look at it here. Sorry, guys. Like I said, I haven't zoomed out to this time frame in quite a while, so I wasn't aware that it was showing up here like this. So give me just 1 second here. I'll get this done. So we have a little bit clearer picture of what we may be looking at. Let's see here. Yeah, so that's kind of where we're looking at here. This is that range. You know, the deviation above it. Bit of a deviation below. We're coming to the top again. I mean, market structure is bullish coming off the lows. Low, high, higher low, higher high. At the moment. A lot of volume coming up at the bottom here. Even more volume on this thrust right here. Let me see here. Yeah, so if this drops down, what I say, 230 or so. Yeah, this is going to get it right here around the EQ of this structure here. So if we're heading down below that, I think that really starts opening up the case. Well, maybe we'll have it lower here. Again, the idea that this right here may be 1, 2, 3, 4, 5. And then A, B, C. So you get an A and a B, and then you'd have a C going down lower. see here. Of course, that's going to be a terrible way to do it with the thing there. Let me see here. Yeah, you're not going to be able to figure it out with that because it was such a large move there. I don't know, I guess we could probably set it up here. See, I never use this setting, though. I never use the, right here, the fibs based on log scale. That would have price potentially going way on down here to $1.23. Man, I think people would be crying with that, right? Oh, wait, you know what? That's if it's 5 down. Never mind, it wouldn't be 5 down. It'd just be 100%. So right here at 24.51. There we go. If this is, 5 up here, and then this is an A, and this is an A, B, C for a B, and we got a C coming down, I'm looking around here at this 24.51, maybe the high volume node here at $12, which would put me just a couple of dollars below the first place I ever bought Ethereum. I bought Ethereum at $15.49, I believe, was that first purchase of Ethereum back in January or February. January, I think it was, of maybe February of 2017. And you go, oh no, it can't go there. Sure it can. This is all free air here. If we're losing this area, boom. And this, it makes quite an argument for a 1, 2, 3, 4, 5. And if we look at this, you can go 1, 2, 3, 4, 5. So there's 1, 2, and then 1, 2, 3, 4, 5. 3, 4, and then 1, 2, 3, 4, 5 gives you 5, right? And if you got 5 down, it's 3 up, guys. And so you get a 1, 2, and then 1, 2. Oh, let me see here. 1, 2, 3, 4, 5 maybe here. And then, of course, A, B, C gives you B. And then you get your 5 count up there as I did. And if you believe that Ethereum and Bitcoin are kind of correlated and whatnot, well, I mean, all of a sudden you go, okay, well, maybe it is possible. Maybe. First thing you're going to want to see, though, large time frames, you're going to want to see a drop below this swing high right here. Did we get that yet? Let me see. This swing high is 363.29. Let's see here. We did dip below it, but we want to see a close down below it. But we've dipped into it, so it's got a hold here, really. If we're dropping down into it, that starts making it kind of sketchy now. But especially if we're dropping below that 235 kind of area, it really starts looking sketchy for further downside. Get down below these swing lows, you should be looking at least at, like I said here, at least at $24.50, potentially at $12 on that. Am I hurting anybody's feelings today with that? I hope not. Just being realistic as we look at it, guys. Again, counting it out. Suggest that's where it's at. It's hard to believe that Ethereum would go down there and Bitcoin wouldn't be going down as well. It's difficult to kind of see that. But again, maybe this is just an A, B, C here. And then it's done, and that's fine. And again, this is a 1, 2, and then this is working on a 3 here. But again, the fact that it's short off that there, if it continues down to what I'm looking at, gives it a short 3, and I'm not real confident about a short 3. Well, let me see here. Outstanding move with the Tesla? We'll see, right? Let me see. Let me catch here. Budman says Euro is still something. Yeah, they're still something. They're weighted strong enough. They're weighted almost 58% of the basket that the dollar is compared against to get the DXY value. They're pretty significant still. Yeah, we'll see what happens with them. Let me see here. Candle Shepherd says, I've been trying to get a hold of my emotions for 3 years after having learned the technical stuff. It took me 6 months with no trading and just looking at how my system would work to really start trusting it. That's the whole thing, guys. It's about trust. And it's hard to be trustful, especially if you're new, because you're not aware of how the market works. Like, for instance, I say these things. I say, well, look, it looks like technically that we could have Ethereum coming down here. Most people's response to that, maybe many of y'all's, is, What the hell is wrong with you? You're such an idiot. God, you're so stupid. Ugh. You start looking like Napoleon Dynamite, right? But you shouldn't be that way. It's not about what you want emotionally to happen. It's about what are the possibilities. If it goes up, I'm great. If it goes down, I'm great. Because I'm not emotionally tied to which direction it needs to go. We can trade it either way. But it's dangerous when you become very emotionally tied to something because you miss things that you should be paying attention to often. Right now, we are getting a bit of consolidation under this ascending resistance, though. Like I said, this is if that plays out. It may not play out like that, guys. Oh, man, I've got an itchy throat right now with these allergies. Let me see here. God dog it, I'm trying to figure out where. There, that's where I'm trying to go. Right there. Pretty decent area of support and resistance on here. Popped up, pulled down. Are we just getting a retest of resistance? I mean, my count says, hey, 1, 2, or AB, right? So we popped out, got rejected firmly back into here. That's a firm rejection, guys. That's 489.57 down to 311.04 in a week. So that's a significant decline there, basically from $500 down to $300, right? So 40%, 40 somewhat percent in a week. And then price kind of overlaps, recheck. Yeah, see, I don't see how this is bullish at all at the moment here. You got this strong rejection. And then you've got all this overlapping doji candles. Doji's over here, long wicks, small candle spreads, all overlapping here as it hits this area once more. And now we're starting to get rejected with a weekly that's about, that may just engulf the previous week bearishly. See this right here? If this week closes below 365.43, that would be a bearish engulfing. Now, it says pause, at least potential reversal. So then next week, we'd need another supply candle coming in to confirm the continuation of the downtrend and that that's a reversal. But it could be setting up for one here. And again, it makes sense. Pushing back up, retesting resistance as resistance, getting rejected again, head below your swings, below your swing low there. And then it all becomes okay, how far does it go? Again, I've got an initial target down here around that 230, whatever it was, 235, 240 area. If price keeps heading below that, all of a sudden it starts looking more like a 1, 2, 3, 4, 5 ABC, 1, 2, 3, 4, 5. So ABC working its way down. And, again, if we're getting down to these lows here, all of a sudden this starts looking like an A and a B and a C down toward 24.5 or 12 even. So, again, guys, I'm not trying to do anything to hurt your feelings or offend you or anything. I'm just, talking about these things as they show up on here. Until price actually does them, though, they're just possibilities. But it behooves you to understand what those possibilities are rather than just being emotionally long, rah. Everything that happens, no matter what it is bullish, as most people are right now, all over crypto Twitter for Bitcoin and everything else. You may be right. It may be bullish. Things may be going on there. But if you're not aware of why you could possibly be wrong, then you're going to probably lose a lot of money trying to buy dips on the way down. You don't want to do that, right? Omar, what's up, man? Good to see you checking in. Let's see here. Let me catch up here. Crypto Mowgli, you're saying you were shocked the other day when you saw that I was on at 4 p.m. and not 5 p.m. your time? You preferred an hour earlier, though? Well, you can thank your daylight savings time government that that is there an hour earlier then. Let's see here. I see a lot of people agreeing about getting rid of social media. Guys, listen, if you haven't watched it, there's a show out there. Remember, guys, I don't just spend time talking to you about the markets here because I'm a firm believer that how you view the world affects how you view the markets. All right. And so if you believe that in this world you are a victim, well, you're going to believe that you're a victim in the market too. And if you believe you're a victim in the market, there's no way you can possibly make money because you believe that you're beholden to whatever the world does to you. You don't believe you have any control over it. So that said, and with the social media thing we're talking about here, that I see you guys talking about, listen, there's a movie called, oh gosh, maybe one of you guys know what it is. That social media movie, that documentary that just came out. Oh, let me see here. What is it called? The Social Dilemma. Or The Social Network. Which one was it? Oh my gosh. Do we even know which one it was? It's on Netflix. Oh, okay, yeah, it's The Social Dilemma. The Social Network, I think, was the Facebook one, right? Social Dilemma. Thank you, Cameron. I appreciate it. Spiral Architect, everybody there. Yeah. Make sure you guys watch that. Seriously. If you don't have a background in psychology or anything like that, you may be surprised at what's actually going on with social media. These are things I've been warning out for years now. Everybody gets on here and they just freely give out all this information. And then they believe that, Google and Facebook, whatever, don't have a right to use their information, or that it's against the law. It's not against the law, guys. You're on a private company's site. They're letting you use for free. Nothing is free in this world. Nothing. It's always going to require something of you. And so if you're not paying, you don't know what it is. Guess what? It's you. You are or your time, your attention span is the product. Your propensity to purchase is the product. And these platforms, Twitter, YouTube, Twitch. Watch me get banned now again. Anyway, you're the product that they're selling to the advertisers. They're not putting the product there for you. They're putting the product there for you as long as it benefits them. In other words, that they can get paid more. It's all a roundabout thing, guys. And so if you don't understand about advertising and marketing, really the real psychological lessons behind it, watch that. It's an easy watch. It's a silly way they put the story together, but nonetheless, it brings a lot of good information that you may not be aware of. And it may change the way that you actually interact on social media. I would hope it would. But there's a reason I turn off, my phone when I do, later in the day. There's a reason why, I spend the weekends without electronics for the most part. It's a bad thing. So just make sure you guys watch it if you haven't yet. I think some of you may be like, oh yeah, exactly. I knew that was happening. I thought so. Others will be like, wait, what? The important thing is just to know, right? Let me see here. Candle Shepherd, you bought Ethereum for the first time at €9, so roughly $12 at the time. Those were the days. They may be the days again, right? Let's see here. Sherry, sorry you asked about Ethereum. Hey, like I said, though, guys, again, everybody gets bent out of shape about my ideas about Bitcoin, right? Potentially. And again, guys, I've never guaranteed it's going to happen. I said I'm leaning that way until something else happens otherwise. But this is all very big picture, very long time frame looks. And as I pointed out with Bitcoin, and as I just tried to point out with Ethereum here, there are levels that need to be crossed, things that have to be done just to get to that point. And the further you get through those levels, the more confidence it increases in what's going on. But at no point do you ever become completely 100% sure that's what's going to happen. Don't ever feel that way when you're trading. If you're feeling that way, understand that it's emotional. And if it's emotional, there's a good chance you're going to be wrong. Okay? You guys need to make sure you're doing that when you're out there trading. Otherwise, you're just going to continue to... If you keep doing what you've always done, you're going to continue to get the same results you've always gotten. Period. Well, they say insanity is doing the same thing over and over and over again and expecting a new result, right? Think about what those two things are saying. If you're on this track where you're just constantly losing money rather than making money as a trader, then you need to understand it's something that you're doing, that you're repeating consistently. And you go, oh, but I'm using a different method or a different system. Well, that's not what it is. It's probably your emotions. It's probably not taking risk management seriously and doing it correctly. It's not, like I said, guys, your emotions, risk management, those are the most important things in trading. The rest of what you see on the screen here, this is all just the whipped cream and the cherry on top. This is all secondary. You can understand, you can project the best targets in the world, the most perfect targets in the world, but you will not hold to get to them if you don't have your emotions under control. And of course, the fact is you're not going to have the most perfect targets all the time. You might get lucky and get close to it a few times, but generally you're going to be off more than you're going to be on. And so risk management is where you save yourself. Right? Let's see here. Data says there's a reason I stopped having a phone more than 15 years ago. Let me see here. Amber Lee says facts don't care about our feelings, and that is a fact. It doesn't care whether you believe that or not. So yes, I definitely, facts do not care about feelings there. Can we check gold? Sure we can. Let me look here real quick. Gold's another one a lot of people really hating me about. But it is what it is, guys. From an Elliott Wave perspective and from a larger macro perspective that I've talked about. So on the 1 hour here, I think we've still got, we're looking on a fifth wave down for wave 3 here. Now, whether that's a 1, 2, 3, 4, 5 or a 1, 2, 1, 2, 3, 4, 5. I'm looking for this target down here. I mean, immediately we're looking at the swing low at wave 1. Always looking at that swing low. So right there around 1851 or so. And then beyond that, looking potentially down here around 1836. Wave 5 potentially getting down here around 1815. If we're zooming out here a bit, let's go to the daily here. See what we can see on the daily. I mean, please somebody tell me how bullish that looks. It doesn't really, right? Because what are you doing here? Resistance. Resistance. Support. So if we're falling through here, again, you're just looking, in a bear market, you're just going to have price hitting resistance and dropping down further, step after step. In a bull market, it hits support and bounces up, hits support, bounces up. I mean, to me, there's nothing really constructively bullish about this here. We continue to hit resistance and drop on down. Hit resistance, drop on down there. Hit the lower lows coming in. Bearish market structure, high, low, lower high, lower low. Potentially a lower high if we get down below this right here. If we don't, if we go from here, then we have a low, a high, potentially a higher low if we can get above that right there. So right now, if you're trading gold, especially if you're looking longer term, you're most interested in this swing low right here at 1851 and this swing high up here at 1939.40 cents. Those are your two most important levels right now. By the way, you got ABC right here. 1, 2, and then 1, 2, 3, 4. Looks like we're getting a 5 out of here. But again, if we're doing that, there we go. That should give you a wave 3 right about here. So maybe it doesn't get down quite here. Maybe it gets right here around this 1847 area. And then maybe your 5 gets down here around 1826. Depends on if we get some subdivision in here or not. But, again, bigger picture, we keep zooming out here. Same thing that I've been looking at. The idea that we've got, oh my gosh, there's all in white still here. Give me just a minute. We'll get these here so you can see these. Let me see. There we go. Hey, look at that. There are stuff there. Look at that. Let's see here. I do have some more in there. Got to remember where all those counts are and all this. Yeah, so right now, I mean, this is kind of the way I'm looking at the moment here. I thought I had a count. Oh, wait, there it is. Nope. Where'd you go? Ah, there it is. Man, sorry about that. I didn't realize I had so much that count was still in white there. Let me get that out of there. All right. So, I mean, basically, looking at this basically as an A down here and then a B up here as a flat, as an expanded flat. It's like get you a C down here, 850, 900 kind of area. That's still the way I'm looking at it right now. Especially if we're dropping below this red line here, continuing down lower there. There's a big difference from where we're at here, and then we've got the next swing high right there around 1788, which kind of denotes this whole kind of area here. So if you're dropping back below that, well, things are looking down at that point. So, if you don't want to be as bearish as you say I am, you can look at it that way. But I don't see anything overly constructive on those short time frames right now with what's going on with gold here. Crypto Mowgli, have a great weekend, buddy. Let's see here. Amber Lee says risk management. Once I learn that correctly and learn how to use it correctly, it's ball game on. Yeah, exactly. I'm also working on some extra content for you guys in Discord. We do have a risk management section in our educational videos. I'm currently working on expanding that and providing even more information in that. We did recently some leverage and risk management on one of the weekly Tier 3 live stream sessions that we do. So we do have that as well. But always trying to figure out another way to say it, a better way to say it, maybe that makes more sense. Because, it's the boring things that you do correctly and consistently that have the greatest impact on your life. Not just in the markets, on your life, guys. We all want to do the flashy, fun stuff, but those boring things that we do consistently and correct, that we do correctly on a consistent basis, that's what determines what happens with your life. And so it's no different in the markets, in financial markets, guys, in the, trading and whatnot. So, a lot of people don't want to do the risk management because all of a sudden it means they can't have those flashy dreams that they have in their head. Right then, all of a sudden it means they're not going to make $1 million on a trade or something like that. But, again, that's the problem is that emotion there. You shouldn't be thinking that way anyway. Okay? Let me see here. Yeah, definitely. Amber Lee, I think you said it perfectly. They're saying that the more they study and listen to me and my system, the better they're getting. It's a pace, not a race. And that's exactly the way it is, guys. If you can get your mindset out of how fast can you become a millionaire overnight, yeah, that. If you get your mind away from that and you work more on, okay, how can I develop the most profitable system possible? Something that's consistently profitable. If you concentrate on your system, which includes the risk management, the emotions, and then whatever you're doing here on the charts, it's all part of that. If you concentrate on that and you get that, the money's going to follow, guys. But if you're concentrated on the money, on how much you're making or losing every trade, then that's going to impede your ability to progress. All right? Now, you do have to care so much so, as much so as is required to make sure that you're using correct risk management. But, again, what I'm talking about is when, as new traders, you go in there, you go, man, if I buy this here and I'm right, and everybody else is right, and it goes to the moon tomorrow, man, I'm going to make $1 million, right? They don't all work like that, guys. Let me show you something. We had an MGen trade here. Let me see here. This is a stock trade setup that we did back here on the 8th. This setup I put out on the 8th, okay? For Tier 3. Now, the only requirement from that was that price needed to move through this red line. And once it did, I expected it to hit this green box. It did it right here in one day. The market opened on the 28th. So 20 days after I posted that, the market opened on the 28th, and it gapped up just above that box. Now, I've since added some updates for our friends there over in Discord, movement beyond where we're at right now. But that was the trade. This is 100% right here, guys. From open to close, from open to target. 100%. We've got at least one member who I've already talked to who opened down here somewhere and ended up riding that whole thing up to that box there. But these don't happen daily, guys. Okay? This is more the exception than the rule. But the other thing this shows is it's about preparation. You guys want to know, well, what can I do today? What can you tell me right now that's going to make that I can enter right this second and I can get that kind of profit tonight or tomorrow? But that isn't what it's about. Being a trader is about being prepared. It's about getting in before this happens. It's about noting what's going on around you. And what that means is sometimes you're going to be wrong. That's part of it. That's why you have definitive validation levels and invalidation levels and entry levels and stop losses and targets already figured out. Because this is 100%, not even in a day. This was 100% like in minutes, basically. But it was preparation 20 days prior that enabled our members to be able to take advantage of this. And that's the way you should be looking at your trading. Don't look at it as, oh man, I've always got to be in the market, so I got to see what can I get in the market right now? What can I get into right now? That's emotional. When you look at the market, it should be saying, okay, I want to take a look at the market and see where is the market at in general. If you're looking at stocks, what are the different sectors doing in general? And then you kind of move it down from there. You get to more specific stocks or more specific cryptos or more specific Forex pairs. But the goal is to be prepared. The last thing you want to do is enter up here, because especially when it moves violently like this, you could enter and it could go up a little bit, hit your stop loss, ramp right back down, turn around, ramp back right up. And it's knocked you out. You lost money and it's way above where you started. Because that volatility, you want to be in before the volatility. You want to be able just to be in and ride it up. And it's the same thing with crypto and whatnot. It's all the same thing. Crypto, Forex, all that kind of stuff. If we look at, let me see here. If we look at USD CAD here, USD against the Canadian dollar. We've been tracking this one all the way down. We thought we had a couple of breakouts along the way. We didn't. It's fine. Short, continue short, whatever. It has been money off this low here. It's been money off these lows here. We're up. And in case you guys think that I don't trade, I actually posted the other day with the update current positions that I have in this particular trade, which are up right now. Let me log in here real quick. Give me a minute here. Okay. I got in at 1.31703 and 1.31956. So, and right now we're about 1.334. So almost 200 pips ago, I entered right here on that. Now, those are my two latest positions. I have positions from this area. I have positions from this area right here. And again, had that right there. Those are my last two positions that I've got on there. But it's about being prepared, guys. It's about understanding what's going on there and where we're going. So, again, with oil dropping and the DXY rising, that's a great thing that should send the USD CAD up higher. So, right now we've got 5, it looks like, up here. It looks like we've got 3 down. It looks like we're working on, the first subwave of the next 5 up. So a lot going on there with that. All right, we're getting a little bit of drop, a little bit of buying in there. Can we check natural gas and oil? Sure, we sure can. Tal, what's up, buddy? Haven't seen you in a while. He says, good to be back in the holistic and humble analysis of everything around us. Did you already look at SPX? I did. I did look at that. Let me see here. Oil. Let me get up oil here. Oil was a bit frustrating for a bit, but turned out all right finally. It's been good short. Big picture of oil is this right here. So I believe we've got 5 up here. And at minimum, we're looking at an A, B, C down here toward about 29.5 at minimum. Again, you've got this A, B, C for B. They're not here. Now, I'm not convinced yet that this bottom was the termination point, the reversal point down there at negative almost $40, and that this is wave one up. I'm not convinced on that. As a matter of fact, coming up through it, I'm thinking this may all just be a wave 4, and we still have one more lower low to go. But for now, we're going to play the bullish side of it. So the bullish side says we should be looking for wave C to potentially get us down here around 29.51. Normally, we'd look at the 1-to-1 here, so you can probably watch it if you want here at 32.44. But I think we're probably headed down here. Now, the thing is, if we're headed down here, that really kind of opens the idea of a 1, 2, 3. And that would align with my bigger macro thoughts about continued decrease in demand as more lockdowns happen and the economies continue to tumble off a cliff. Less money to spend, so people aren't going to be buying as much, so you don't need as much fuel for trucking and whatever, and for your airlines moving stuff around. Your two biggest purchasers of oil are airlines and cruise ships. So if you've got both of them not doing so well, guess what? That's not good, right? If you've got those two going on, then you're going to see a strong decrease in demand. But the problem is, everybody's still producing oil, and the Saudi has a distinct advantage. They might take advantage of, which is that they can produce oil for something like $5 or $10 a barrel. There's nobody else that can do that. So if they flood the market during this time where price of oil continues to drop significantly so that it really hurts these other countries, guess who's going to pick up the windfall when everything turns back around? The Saudis. And so they've used their ability to produce such cheap oil to basically kind of lock people out of the market, other countries out of the market, gain their foothold on the dominance. Because what happened, again, 2015 basically to 2020 was shale oil in the U.S. That's how the U.S. became, as large a producer as they were. But again, as I told you, shale is expensive to dig for oil through. But all that cheap, easy money through the last decade or so meant that all these equity firms were able just to flood the frackers, the shale oil guys, with money so that they could pull that expensive oil out of the ground. But again, now we're flooded. Demand is still reduced significantly. We've still got a supply glut, and there's more and more oil still coming on. So again, if the economy continues to tumble, if it continues to do that as expected, then I don't see oil doing anything good anytime soon. And if Saudis are really serious about doing that, I can see WTI dropping down there again, potentially lower than it did in May. I mean, what a thing to behold, just from a historical perspective, being in the market when it dropped for the first time ever below zero. That was crazy. People literally, guys, remember what that means is these people who were selling oil, they were literally, at the end of the contract closes around $36 or $37. They were paying $36 or $37 for every contract, for every contract there for oil. They were paying people to take that oil off their hands because they had nowhere to hold it. Why? Because WTI, West Texas Intermediate, is here in the U.S. and oil flows through pipelines. Cushing's your major hub there, but Cushing was full, or at least reserved. And then you have to figure out, okay, well, how do I get it and stick it out on a tanker in the water or something? Brent is already in the water. Brent's already on tankers and whatnot. Not quite the same idea, but WTI is susceptible to supply gluts like that. You don't have anywhere to stick it. What are you going to do with it? Because the difference between WTI and Brent contracts is WTI contracts, if you're holding that contract at the end of the period, when it closes at the end of that month, you have to take delivery of the oil. You cannot say, no, I'm not going to take delivery. You have to. It is a legal binding agreement. But if you have Brent contracts, you can settle that contract in cash. So if you don't want to take the oil, you can settle in cash. So that's why, WTI dropped like it did. Well, well below zero there. And again, with everything happening up, if it continues doing what it's doing, I see little reason to believe that we can't make another push on down there. Let's see here. Natural gas. I'm looking at this right now. If this count is to hold here, this count up from the bottom here, we got a 1, 2, 3, 4, 5. We really kind of need this reversal from about where we're at. If it goes higher, it should violate this ending diagonal here, because that'll make wave 5 larger than wave 3 and has to contract. Now, that could still open up a expanding, an ascending broadening wedge. But for right now, I'm kind of looking for a reversal off of where we are and see if we can get that. We definitely need to drop down below this swing low right here at around $2.90, 96 cents or somewhere right around there, to really say, okay, maybe this is probably the top here. Right now, it looks like we might have a thrust out, so we should see this tumble back on in if it's going to. If it continues pushing up, I'm looking at $3 and 3.558 and then 3.779, and we'll just have to work on the count here. Now, right now, I've still got my old count here, which has us at a 3 down here, in this down area here, and then a 1, basically an A, B, C here. But that's a pretty big ABC there. I'm going to have to go back and look at this bigger count, because I was assuming maybe we had a 3 here, a 4 up, and then we'll have a 5 down. I think we may still be able to do that, but I have to go back and look at it again. But there is the possibility that this is, the bottom right here. So right now, this count is based off the fact that this is the bottom right here, until it tells us something different. Yeah. Anyway, that gets that done there, guys. Again, just keep watching what's going on with DXY here. You need to get above this swing high. Until it does, assume it's probably printing a triangle here for a wave 4. But even then, a thrust out of a wave 4 should only get you down around 90.5 or so, depending on where wave E ends. Other than that, Bitcoin here, again, we're still ranging, guys. Don't forget, we're still ranging in this area. And the closer you're trying to enter to the middle here, the more likely you're going to be wrong, or at least get stopped out before you're proven right. We jump back over here to what's going on. Let me jump back over to MEX here. Again, you get this convergence of these value area, the value area and the other distribution area there in this. I really want to see where does price close here. If price can close below this IBR here, so below basically 13,360, that'll be more bearish. Especially if we can get here, if it closes below the POC here at about 13,320, that starts looking more and more bearish. The higher it closes up here toward this end, the more potentially bullish we may see it push out, which means more possible upside. But for right now, the same thing I've been talking the last few days, we've just been ranging within previous value areas. And then today, again, get this large IBR sitting, and then our value area is basically, it's one up now. It's one up above it now. But more or less within this value area. The only real bullish thing we have going on all this at the moment is that the TPO POCs here are moving up. And so what that means is price is spending more and more time at higher levels, at higher price levels. But we've got a lot of overlapping value ranges here. And as I've said before, when you've got all these overlapping value ranges, what that tells you is that you're losing momentum. So you had momentum, and then you're losing momentum. A little bit pop. Again, you got overlapping here, and then right away you got a pop, and then overlapping right here. Not really making a whole bunch of move up. So you've got to be careful. Contrary to what you want to happen or what you think may happen, you got to be a little careful to what's going on there as this continues to play out. So guys, those of y'all over in Discord, of course, I'll keep updating you with this. For right now, be aware that there is this aggressive OTF selling coming on up here at about 13,640 to about 13,690 kind of area. So 13,640 to 13,690. Wait, what did I just say? What was that? Totally lost me. 13,640 or 13,690. Okay. So that's basically this area right here. That's where it is. So what happened here, all those single prints you had, was when it popped up into this supply right here. And that's why you got that aggressive positional traders selling right there. Trying to defend that area. So we'll see, does price continue to push up toward it? Does it build more and more time up toward it? Or does it just kind of go on down and start pushing down lower here? Like I said, you had this aggressive buying going on here a couple of days back. The next time it came down, not really. No aggressive OTF buying going on down there. And then here, you're up a little bit more. So you got a little bit, but nowhere near what you have up here for the selling. So just be careful until we're kind of getting out of that range area. So that'll be it, guys. Let me get out of here. It's done. It's 2 hours. I got to go. I hope you guys have an amazing weekend. I hope you take some time away from the charts. Spend time with loved ones, family, pets, whatever you've got. Try to spend some time away from electronics, guys. When I say get away from the charts, it doesn't mean, leave your desktop and then kind of watch them on your phone. Your body needs to not think about it for a bit so it can reset. So all that stress that's been building up by watching the chart all the time leaves you. And that way you don't come back to the charts full of emotion. All right, guys? Try and keep that under control and you should be a lot safer with that. That said, remember, the only thing you control in the market is how much you lose. So it's all about that risk management, right? Don't forget, join us over here at howtotradetowin.com while you can. We might or might not have a few special things coming out for our members here as the end of this year comes up here in November, December. So you might want to be a part of that. Hint, hint. But other than that, guys, even if you're not, please join me again on Monday at 11 a.m. Central Standard Time. We'll take a look at Bitcoin, all right? You guys have a safe weekend. Take care. Thanks so much for joining in. I appreciate you guys. We'll see you next week.